myself Aditya P. Tripathi. I'm here to extend our discussion on the topic of statement of cash flow. This is going to be part 3 of our lectures, which will be focused upon numerical problems on statement of cash flow. So this is going to be part 3 of the lectures series on dealing with the practical problems on statement of cash flow. In previous lecture of mine, I told you how to deal with the statement of cash flow, preparation of statement of cash flow as per direct method as well as indirect method. And we have already dealt with the practical problem on statement of cash flow with the help of indirect method as well as direct method. So continuing our discussion on the same topic, I shall today be focusing upon some different types of problems which we come across when we have to solve a question on statement of cash flow. Since the series is focusing upon the statement of cash flow from the perspective of management accounting, we need to understand that the question will not be very direct. We shall not be getting a direct question that this is the information provided to you and you have to prepare a statement of cash flow. Here what happens, we are getting a question along with some practical question or implication based question. For instance, there can be a case study which I'll be dealing with in coming lectures of mine, and there you are provided with the caselet, you are provided with the case study, and you have to give your input. And the question nowhere tells you that you have to prepare a statement of cash flow. So you have to apply your common sense, you have to apply your logical aptitude that whether statement of cash flow shall help us or not. Likewise, some other questions are there on statement of cash flow where we can provide you the entire question of statement of cash flow with some gaps, with some informations missing. Like suppose if I'm giving you a question of statement of cash flow, the entire statement of cash flow is ready, but some informations are missing. And we ask you at times that you have to fill the gaps, you have to fill the blanks, and then afterwards you have to give your valuable comments. So that can also be a situation which we come across, and that is something which I'll be discussing today. And apart from that, there can be a situation when you are going to your banker and banker is being asked to take a decision whether loan should be sanctioned or not, and that decision has to be taken by a banker on the basis of your statement of cash flow. So how to take decision, when to give a yes, when to give a positive recommendation that yes, loan should be given to this party, and when to say no, that the loan should not be given to this party, this company, based on their statement of cash flow. That is something which I'll be discussing in today's lecture of mine. So with this agenda that how to deal with the varying type of practical problems on statement of cash flow, I'm going to start today's discussion with a question which is going to be problem number 2 in this series. Suppose there is an accountant of a company called LK Limited which is reporting some discrepancies in the statement of cash flow of its 3 subsidiary companies, namely A, B and C. Suppose there is a company called LK Limited, and you have in this problem you are provided with the information regarding the 3 subsidiary companies of this company, that is LK Limited, and these subsidiaries, they are known as A, B and C, and they are providing you some excerpts from their statement of cash flow, and this is the information which is provided to you. If you look at the information which is provided to you, they are giving you the increase and decrease in cash for all 3 companies, that is A, B and C. They are giving you cash and cash equivalents at the end of the year, and for A and B the information is available, but for C it is missing. There is a question mark, which means that you have to fill this blank here, you have to put the value here, you have to find the value here. At the beginning of year, they are providing you the information for A and C. The cash and cash equivalents at the beginning of the year is available for A and C, but for B it is missing. And eventually the increase and decrease in cash, what we call as change in cash, or what we call as net cash generated or cash used in out of different activities. For company A, this total information is missing, whereas for B and C it is available. So somewhere you find that for a specific company called A, we are having opening and closing balance, but we are not having net increase and decrease. Whereas for B, we are having opening cash and cash equivalents, as well as we are not having opening cash and cash equivalents, but we are having closing cash and cash equivalents. Whereas for company C, closing balance is not available, and opening plus decrease and increase is available. So this is what is in front of you in terms of a question. So, unlike the traditional way of asking a question where we were provided with the balance sheet of a company for 2 different periods, we were provided with the profit and loss account and some additional information. Here in this question, the case is entirely different. Examiner has actually, given you the solution of the question with some missing information, some missing values, which you are being instructed to fill in. And cash flows during the year is given from different activities: operating, investing and financing. For company A, it is given for operating and investing, financing is missing. And for company B, operating and financing is given, investing is missing. And for company C, operating and investing is given, financing is missing. So my dear learners, now here the question is how to deal with this situation, how to solve this kind of question where there is no additional information, there is no profit and loss account for 2 consecutive periods, when there is no balance sheet for these 3 companies for 2 consecutive periods, and you are being asked, you are not even being asked to prepare a statement of cash flow, rather everything else is given, and you have to simply fill in the blanks. Now, how to deal with such kind of questions? Sometimes you feel like meeting with an accident in the examination, that you never even thought of facing this kind of question in your examination. So I would first suggest you, whenever such kind of question comes, if you look at the question closely, the format of the question is entirely different from that of statement of cash flow. So first of all, I suggest that you should get reminded of the format of the statement of cash flow. Before giving a start to this question, let's have a look what they are asking. You are supposed to help this company in solving this problem and comment on the cash position of 3 companies. So not only you are supposed to fill in the blanks, but you are also supposed to give your valuable comments on the financial position of these 3 companies. So first of all, the first step is, I always suggest my learners that you should get reminded of the Ind AS 7 prescribed format of statement of cash flow. If you remember, in that format, what was the way to start? First, we started with the cash flow from operating activities, then investing activities, and moving towards financing activities. Afterwards, we were aggregating them, calling it as increase or decrease in cash, and adding the opening cash and cash equivalents to arrive at closing cash and cash equivalent. So if you actually follow this process, this procedure, this format, you will never commit a mistake, because in such kind of question you feel that filling the blank is simply an act of addition and subtraction. Yes, of course it is an act of addition and subtraction, but you should get reminded of the statement of cash flow format, and in that format only you should try to fill the blanks. So my objective while putting this question in front of you was to first let you know that you will not get the similar kind of question every time in the examination, or in practical life you may not get this kind of situation where we are simply asking you to perform an act, because you are no more a financial accountant, you are a management accountant, and as a management accountant your job is to apply your logical aptitude also, your reasoning also. So you are provided with the statement of cash flow of a company, some informations are missing and you have to fill in the blank. Or at times we are provided with the opening and closing balance of cash, and we have to sense from the available information. At times we are having only limited information, and we don't have that much of time to approach to accounts department for the detailed discussion or for detailed information. So in such circumstances, what management accountant does? Management accountant tries to draw inferences on the basis of whatever is available with us. So this question is basically reminding us of that kind of scenario where with the limited information you have to solve a question, you have to attempt a question. Now I'll be moving towards the solution of this question. Once you are aware of the format, I'll be solving this question starting from the company A. We shall first be focusing on the third column, which is talking about the company A, that is a subsidiary company of LK Limited. So what I did, whatever information was available, I have written here under the head of operating activities. There was a negative cash inflow, minus 76.11. This information is available in the question. Investing activity, minus 10.77. Again, this information was available. And financing activity, this information was not available because it has been highlighted in yellow. This the value 61.76. This is something which we have found as a balancing figure. But I'll be telling you how did we initiated the process of calculating. increase and decrease in cash, it was not given. Remember, increase and decrease in cash has deliberately been given here because the format of the question was demanding for this term, that is increase and decrease in cash. Although net cash flow or increase or decrease in cash, they are the same thing. That is why the value of both the rows, they are representing the same value, because there is no difference as such. The question provided us the opening balance as well as the closing balance. So here comes the clue. Everything else is available except cash flow from financing activity. So question provided us the opening balance of cash and cash equivalents, which was 69, and the closing balance of cash and cash equivalents, which was 43.88. So what I did, there is no rocket science here. What I simply did, I tried to find out the difference between the opening balance and closing balance. If you look at the opening balance, it was 69, which is greater than that of the closing balance, 43.88. So at this very point, I am very sure that there is a decrease in cash out of different activities. So my net cash flow should be in negative, because I must have lost some amount of cash. Now what is that amount of cash? That amount of cash which we have lost during this, or we have used out of 3 activities of this company called A, must be the difference between the opening and closing balance of cash and cash equivalents. And if you try to calculate the difference comes to be 25.12, which is the difference between 69 and 43.88. So the simple subtraction of this closing balance of cash and cash equivalent from the opening one gave me the value of increase or decrease in cash. So that value I have written here, minus 25.12. Now if I know that there is a decrease in cash or cash equivalents out of 3 activities, which means there is a negative cash flow, or you can say there is a net cash used in different activities, which comes to be minus 25.12. And if you look at operating and investing, they are already in negative. So it is a clear indication that we have to first aggregate these two values, operating and investing. If you add it, it comes to be 76.11 plus 10.77. It comes to be 86.88. And if you find the difference between 86.88 and 25.12, the value comes to be 61.76. And since other two values, they are negative, obviously, and obviously this financing activity must have been positive. So the positive value of 61.76 we have got, and in this way we have filled the blank which is given in the question number 2 for company A. So for company A, this is the way we started. So we found that opening and closing balance of cash and cash equivalents were present. Simply we got the value of net increase or decrease in cash, and eventually the differential value could be found out, could be traced here by simply adding the cash flow from operating and investing activities and subtracting it from net increase or decrease, and in this way we got this value. Now here, what is the learning point? The learning point, or what is the point of understanding? What is the point where you need to be very vigilant while finding the prefix of plus or minus, whether the value should be positive or negative? And it is very clearly visible here that operating and investing activities, they are indicating the cash lost. That is why the value is in negative. So obviously, if the sum total of this is greater than that of the negative value of net cash flow, there must be some positive value coming from the financing activity. So this is the way, my dear learners, I told you how to calculate the missing value for company A. The same process we shall follow for company B, but there is a difference here. Again here, the operating and financing activities value, they are clear, and the beginning cash is not given, closing cash is given, but along with that they have provided you increase or decrease in cash. So this increase or decrease in cash and cash equivalent in this company B is provided to us, which is 18.65. So with this 18.65, if I have to find the opening balance of cash, very simple. Closing balance of cash and cash equivalent minus increase or decrease will give me the value of beginning cash inflow. So in this company, what we have learned, the out of opening and closing balance of cash and cash equivalent, one was missing, and along with that, out of 3 activities, that is operating, investing and financing, investing activities cash flow was missing. So first we found out, we traced the value of, we identified the value of, we calculated the value of increase, or this is the beginning balance of cash and cash equivalent, which is 89.22, and then we found this value of the financing activity is given, operating activity value was given, investing activity value was found, which came to be 98.12. Because remaining two values were positive and answer was quite less, so obviously the positive value of net cash flow for company B was 18.65 only, which means that the third value must be negative. That is why it has reduced the value of operating and financing activities clubbed together. So this is the way we have done the calculation for company B. The same process we shall follow for company C, and here we found the closing balance, because closing balance of cash and cash equivalents and financing activity was missing. So my dear learners, here what we have done, we have simply filled in the blanks, right? So this was a problem where, unlike the traditional way of asking a question where you are provided with the balance sheet of 2 consecutive periods, profit and loss account of current year, along with some additional information used to be given, we are simply given the statement of cash flow in a different format. The format has deliberately been changed just to see whether you are able to find the value, the missing value or not. Now here comes the role of giving your valuable comment, because first part was you have to fill in the blanks and later on you have to give your valuable comment. So if you look at company A, what has happened? There is a negative net cash inflow of 25.12, which means company has not been able to generate cash flow from different activities for this company, for this subsidiary company. And the most important or significant part is that operating cash inflow or cash inflow from operating activities was also recorded to be negative. So we should understand that this company could not generate cash out of operating activities, which is actually a sign of concern, which is actually a point of concern for the company, that there is a negative cash inflow from operating activities. Investing was negative, which means the investment must have been made, and financing was positive, it means company must have taken the loan. So for company A, the point of concern is that your financing is being done in a positive manner, but investment is not in that proportion, it is going in negative, and there is an operating loss. So there can be a possibility that company might have been meeting out its operating loss requirement or incurring or managing its operating losses with the help of financing, which should not be done in any case. For company B, the net cash flow is positive, although the amount seems to be very small, very insignificant, but yes, company has recorded the positive cash flow from different activities, and here the operating and financing, they are on the positive side, whereas investment is on the negative side, which means company must have invested heavily into this financial year. That is why there is a net cash outflow of the funds under this activity. For company C, operations are very strong. The highest amount of cash generation is from operating activities. Investing is on the negative side, which means there is a cash outflow. Financing is also on the negative side, which means there must have been some redemption of shares or debentures or some repayment of loan or something like that. So my dear learners, while writing your comment, you have to first focus on what? You have to first focus on net cash flow, that in case of company B and C it has been positive, whereas in case of company it has been negative. And after explaining the overall position of cash generation or cash utilization, then you should move on to the activity wise analysis. So this is the way you have to write your comment on the statement of cash flow of these three companies. So I told you how to solve this kind of problem. Now I shall be moving towards another question, another interesting question, which is going to be our problem number 3. Suppose there is a company called GT and it has set up a company named, there is an entrepreneur called GT and he has established a company named LK Limited in 2017. And the company is into the supplies of specialized material to specific programs, and they are considering proposals for investment totaling 100 million rupees during 2021. So there is a proposal to invest into this company, and amount is 100 million rupees. and the company is under this hope that it will meet the financial needs or financial requirement by a combination of internal cash generation and bank loans. So company will first look at the statement of cash flow. If there is a surplus cash flow, company will make use of that cash. Otherwise, for deficit or for whatever is the balance requirement, company will go for taking bank loans. And for that purpose, company is providing you the profit and loss account and balance sheet for 1 year only, that is March 31st, 2020. Company is giving you the profit and loss account of current year, of that specific year, that is 31st March 2020. They are giving you the sales, gain on sales of plant, cost of goods sold. They are showing you different expenses. After that, you are finding profit before income tax, 99,500, then income tax, and afterwards profit after tax. So profit and loss account in a very simplified form, company has provided to you the information regarding profit and loss account. If you look at the balance sheet, it has provided this also in a different format, but it is for 2 consecutive periods. For 2019 and 20, they are giving you source and utilization of funds. Company is having its equity, total shareholders fund, its loan funds, and they are showing you the total current liabilities, total sources of funds. Along with that, they are showing you the application of funds, where they are providing you fixed assets and current assets, and there is a total application of funds. So this is the information provided to you in this question, which seems to be a very traditional or routine kind of question, where we used to have the profit and loss account of 1 year and balance sheet of 2 consecutive periods. In addition to that, company is further reporting some additional information. It is saying that during the period, unsecured loans of rupees 2,000 were repaid. So I am just telling you what will be the treatment of this, so that while solving the question, you will understand, you will recall that yes, sir explained to us what we have to do with this additional information. During the period, unsecured loans of rupees 2,000 were repaid. We made the repayment of loan. So if the loan has been paid, it means it's a clear situation of cash outflow. But under which activity? Since loans belongs to financing activity, it will definitely be reported under the head of financing activities as cash outflow. Depreciation of rupees 9,000 was included in the cost of goods sold. Depreciation is a non-cash item. We shall be dealing this item while computing the cash flow from operating activities. Plant costing rupees 2,000, having an accumulated depreciation of 700, was sold for 2,100 for cash consideration. So the WDV of plant was 2,000 minus 700, that is 1,300, and company sold it out at 2,100, which means company has recorded or booked a profit of rupees 800 on profit on sale of plant. So this becomes a non-operating item. So while dealing with the cash flow from operating activities, we shall actually be excluding this, nullifying the impact of it, and under the head of investing activity, it will result into the cash inflow. It will be shown as cash inflow. Equity shares of rupees 3,000 were issued during the period for cash consideration, issue of share capital. Under financing activity, will be showing it as cash inflow. Now we have dividend of rupees 31275 were paid. So payment of dividend, it is again covered under the head of financing activity, which will be shown as a cash outflow, that company has paid dividend. Plant costing rupees 19,000 was acquired in exchange for equity shares. Since there is no cash involved, you are buying plant in exchange of issuing equity shares. So there will not be any involvement of cash, and since we are going to prepare statement of cash flow, we shall not be treating it, we shall not be showing this transaction anywhere in the statement of cash flow. Investments are in the form of equity shares in a subsidiary. Yes, they have made it in the form of equity shares, and you are being asked to prepare a statement of cash flow for the company. Along with that, the company is going to approach a bank for a loan of rupees 60 million, and they are seeking your advice, your opinion, whether bank should recommend the loan or not. So along with this, that you have to prepare the statement of cash flow, company is also asking that suppose you put yourself in position of a bank manager, whether you will recommend the company for eligible for getting this bank loan or not. So we shall moving quickly towards the solution of this question. What I have done, already additional informations have been discussed. So we have taken the format of statement of cash flow as per Ind AS 7. For LK Limited, I am writing statement of cash flows for a period ending 31st March 2020, which is given in the balance sheet. Cash flow from operating activities, we started our journey from profit before tax. I took the value of 99,500. And as I told you, we have to nullify the impact of non-cash, non-operating items. So we'll definitely be nullifying the impact, which means if this item might have been added, it will be subtracted, and vice versa. If subtracted, it should be added back. So the the amount of interest which was subtracted is being added here. Amortization of patent, non-cash item, depreciation, non-cash item, they have been adjusted. And gain on sale of plant and machinery, as I told you, there was a gain of rupees 800, so it has been subtracted because it was earlier added. This entire calculation provides us operating profit before working capital changes. This is operating profit before working capital changes, and after that we shall be making adjustment for the change in working capital. So decrease in prepaid expenses have been added, and increase in debtors, increase in inventory, decrease in creditors, they have been subtracted. I am not elaborating it because in previous questions I elaborated the reason for it. When do we add the current asset or current liability? I have already, and when we subtract, this has already been explained to you. So operating profit after working capital changes comes to be 2175, and after that simply we have to show the payment of income tax to arrive at net cash flow from operating activity. So but the amount comes to be negative, which means the company has used cash under this activity, that is cash flow from operating activities. Under investing activities, items are very limited. We only had two items. One was payment of interest, which is a cash outflow. Another was sale of machinery. So sale of machinery is basically 2100. Why this interest has been shown as investing? Because investment have been made in terms of this equity only in the subsidiary companies. That is why the interest which I am paying on those activities, those investments, that has been shown as cash outflow, because we have paid some interest as reported in the question, that we have paid some interest under this activity. Sale of machinery, it results into cash inflow 2100, and the net amount comes to be rupees 100. So this is my cash generation from this activity, that is investing activities. After this we shall move towards financing activities, where issue of shares is cash inflow resulting into cash inflow, dividend payment cash outflow, issue of debentures inflow, and repayment of loan results into cash outflow. So very simple items were given here, simple transactions were given which are in routine in nature, and then we'll find the net increase or decrease in cash and cash equivalents, that which comes to be 22,000 negative, which means out of all three activities, since operating activity reported the negative cash inflow, despite the fact that investing and financing have reported the positive inflow, our net cash flow comes to be negative. Cash and cash equivalents at the beginning were 29,000, and then we found cash and cash equivalents at the end, which comes to be rupees 7,000. So 29,000 rupees of opening cash balance and the closing cash balance of 7,000 indicates that the 22,000 rupees of cash must have been lost in this operations. Now the question comes, after solving this question, how to give your decision whether the loan should be granted to the company or not. Now you need to think here whether the bank should grant loan to this company or not, because the operating cash flow came in terms of negative. Since there was a negative cash flow, operating cash flow was in negative. That is why you have to think whether the company should be granted loan or not. So we should write here that no, loan should not be given, because cash generated internally, cash is not generated internally, rather cash has been utilized. Cash from operations is also negative. So we would say that if you put me in the position of a bank manager, I would say that this company should not be recommended for bank loan. So my dear learners, in this question of statement of cash flow, I tried to explain you how to take up a question where you are not only supposed to solve a question, you're not only supposed to prepare a statement of cash flow, but you're also asked to give a decision. At times bankers are getting the statement of cash flow, bankers are having your balance sheet and profit and loss account, and profit and loss account booked a very good amount of profit, significant amount of profit as compared to the previous year. But the point comes whether the loan should be given or not, whether we should give loan or not. So the loan decision of loan is very sensitive, because banker will definitely look into this, whether the company shall be in a position to repay that debt or not, whether the company will be in a position to repay the interest or not. So we have to take a call that if company is in a position to take loan, then obviously is in a position to repay that interest plus principal amount, then only loan will be given to that company, otherwise not. So my dear learners, as a management accountant, your job is to draw inferences out of the figures, out of the values. Whatever values are provided to you from the statement of cash flow, you have to draw inference out of it. You have to think that whether the company is in a position to repay it or not. That is why, apart from statement of cash flow, there is a term called interest coverage ratio, where what company does, if you go to a banker will definitely ask for your interest coverage ratio, that whether your EBIT is adequate enough to repay the debt plus interest or not. If not, then obviously we would say that company should not be granted loan. So with this, I tried to explain you how to deal with the question of statement of cash flow, how to deal with the statement of cash flow, deal with the question of statement of cash flow, where we are not asking you a traditional kind of question just to prepare statement of cash flow. Rather, we need your managerial inputs also. I hope you must have understood and understood and enjoyed today's lecture of mine. With this, I am ending today's lecture. Thank you so much.